All right, good morning, good morning. It's Friday. Hey, we made it. Retail sales and Opex, the name of today's morning briefing. And remember, I put these morning briefings together to teach you how to do it. Yeah, you get the added benefit of my analysis for the day, of the perspective that we have going forward, because we're going to do it together. But the idea is that you pick up this skill set so that you can perform it on your own, especially when we get closer to the open. I have to do these early in the morning because when we get closer to the open, I've got other things to do. A lot of things change between 7:30 and 9:30. It's very often to your benefit to go back in and reevaluate what's going on. That's more on the stock side than anything else, right? Because we kind of touch on that just a little bit towards the end of the morning briefing every day. So one of the first things that we want to do is find out what's on the agenda for today. It really gives us an idea of what our expectations are. This is a Friday. You really want to kind of ask who's interested in holding on to a bunch of positions or opening new positions on a Friday before a Fed week. And it's not necessarily next week. We're not that close to it yet, but we're getting close. And we only had 6 very large events for the month. We're down 2, and the other 4 are quickly approaching. We got a lot going on, so just kind of keep in mind as we're going through today. Look at how range bound we're going to be looking at price, how ranged we are already. There's a lot of compression. The market really hasn't done anything. We've got a very narrow IB. And when we have a very narrow IB, it implies that the work that needed to be done today hasn't been done yet, and that we have the capacity or the potential to really make some moves, right? One thing of note, just we're looking at finance juice. I find this to be an insightful place to start my morning because it gives these market wraps. You can scroll down and find the market wrap for Asia, and then we've got one now for Europe. This is a great place if you're looking for what was running in the overnight hours. Was it retail, technology, banks, real estate? Because very often, whatever was moving in the overnight hours will bleed over into our morning. This is also where we start to see what happened in the overnight hours. If there was a particular event, say like a really big ship getting stuck in a canal, that may impact our market going forward, perhaps for a long time. New wars breaking out, earthquakes, anything that could cause global distress is what we're looking for. And that's a tall order to find something anticipated to cause global distress. Most of the time, you're not going to see something like that. So don't wake up every day expecting to find that kind of situation, right? But we want to look for it. We want to make sure there's nothing like that going on out there. We do have 3 banks reporting this morning, had a couple report yesterday morning. We are starting off in the new earnings cycle. We have a couple of Fed speakers today, and I would not be surprised if we happen to see a few more that aren't listed here come out and start talking maybe later this afternoon. And we really have an open afternoon. There's nothing on the agenda, which means we could get a nice 0-day play today. I continue to get people asking me, hey, are you going to do a 0-day today? Like, say, yesterday when there was late day economic events, right? The other day we had a 1 o'clock auction and a 2 o'clock beige book. No, I'm not doing a 0-day in an afternoon where there's economic events that could spike the market. And it may not be obvious at first why I wouldn't want to do a 0-day, because if you're trading small in something like the SPY and you're making $1 wide spreads, what's the worst that's going to happen? You're going to lose $50. Wait till you size up and you're using the SPX and you're 50 or 100 points wide and you've got $5,000 on the line, and then tell me you want to do a 0-day in an afternoon where there's a beige book or economic events, and you're willing to put $5 grand up hoping that these economic events won't spark the market against you. Right? So sure, when you're trading really small, you may be willing to do it all the time, anytime, everywhere. But once you start sizing up, hopefully your internal risk sensors kick in a little bit and you recalibrate that assessment. So a couple of Fed speakers, retail today, and it is Opex. So Opex, when you look at the calendar, it is always the third Friday of the month. And we're in that same situation now. It's the 15th. It's the third Friday of the month. So this is the monthly options expiration. It's also Opex for Forex markets. So we got a lot of things expiring right now. All right, so we're looking at the Thinkorswim platform Market Watch. You go to calendar, turn everything off if yours looks like this and it's just full of a bunch of junk. Turn it all off, turn on Econo Day. You can move these columns around. Generally, I take the description and set it next to the time. Just makes it nice and easy. And you can see that past 10 o'clock when the consumer sentiment report comes out, that's it. I mean, sure, we do have the rig count at 1 o'clock. Energy has been impactful lately, but this is not anticipated to be impactful in our market, right? If the rig count goes from 172 to 177, it's not really going to change anything in the grand scheme of things, especially when a lot of these rigs are not exploratory rigs. They're just punching holes into an existing pocket of gas or a pocket of oil that's already been found, right? They'll find like this great big lake and then they will punch holes in it from different directions and siphon out whatever was in that lake, right? Underground lake. So the number of rigs most of the time shouldn't cause that much of an impact in our market. So basically by 10 o'clock, we're done other than any speakers that may show up, especially unannounced speakers. Notice how compressed the market is this morning. I turned on the pivots just to kind of make this a little more obvious. From the Globex low to the Globex high, it's a very, very compressed range. Now, we would still consider that part of the overall range, part of the overall quadrant from yesterday's lowest value to yesterday's highest value. And if we were to mark that, you'll notice that we actually had an inside day breakout last night. It didn't stick, right? We kind of peaked above the line a couple of times and it just didn't stick. And if I zoom in really tight, you can see that there's this green line right there, 3806 and a tick. That was the highest value of yesterday. So we had an inside day breakout that failed. This large box is the entirety of the range. But if we break that range down into different quadrants, it gives us tradable zones or perhaps opportunities. So from our own Globex low to the open of yesterday, the cash session, those would be two different zones, but still part of the overall range. And then the low of yesterday to the open of yesterday, that would be the third quadrant. So that gives us three different zones from 3724, 3750, 3780, and 3811. Imagine that, a cog line. Our base case for today, our most basic assumption, the thing that we assume to be most present is that we're going to range today. Things could get really ugly if any of the banks happen to drop a little bit of their analytical wisdom on where they see things going forward. Say one of these banks today give a shout out on a depressed GDP number for the end of the year or something like that. They could come out and really rock this market either to the upside or the downside, not by reporting on, say, something that their bank did in the last quarter, but based on what their analysts see for the overall marketplace going forward for the end of the year. I noticed on Finance Juice, for an example, that a firm, Goldman Sachs, cut China's 2022 growth forecast from 4% to 3.3. If one of these banks today come out and cut US forecasts, say down to 1% or something just drastic and stupid, that could really kick this market off today. So watch for that. It should be done by the morning, right? If they haven't done it by, say, 9:30, then they very likely won't do it. Doesn't mean they can't do it later on in the day, but still, we can't sit around all day hoping for something that may or may not happen, right? But that would be one concern that I have today, is there would be some kind of forward growth cut that would shock the market, or a forward growth expectation that would also shock the market, pop us to the upside. So that pretty much covers the discussion on a range day for today, and it is a wide range that we could do. Beyond that, we've got half an ADR at 38.42. I guess we could say 38.43 really. And then beyond that, 38.88 would be a full ADR. We do have a market maker move this morning of nearly 0.75%. This is insightful. They are pricing in volatility this morning. If they're pricing in volatility, you should price in volatility. This little market maker move emblem sitting up here, that label, is a flashing neon light right now that says, hey, watch out. We're expecting volatility. If you want to learn more about this market maker move, by the way, it's a think or swim thing. You can go on Google for something called the Ticker Tape. It's a TD Ameritrade publication. It's free, and they explain all kinds of things in that website. And you can search. You can use search parameters and just search market maker move. They've got like 50 articles. They go into detail about what it is, how you can use it, all kinds of great stuff. I've heard really intelligent people who are prominent in public try to talk about this thing and screw it all up. And of course, they talk with conviction and they act like they know what the hell they're talking about, but they get it all wrong, completely wrong. And how do I know that? Because I read all those articles. I read every damn one of them. And every time I go over there, I look to see if there's any new articles. So, it's not like I'm some genius. I just read the information. If we expand beyond the base case for today, what is the likely outcome that we have left on the table? Well, we can break out to the upside, or we can break out to the downside. Let's call a timeout for a second and discuss this from the idea that we rallied up off of these lows and we are now sitting in like a topping pattern, but it's only a topping pattern from the perspective of this rally off the lows. If we look at it from this nice move to the downside, this is just a nice pullback, like a dead cat bounce. Let's go out to the daily chart for a moment. It's a TRB, trend line breakover. We broke it to the downside. We had a nice little rally after breaking through it, almost like a Busby maneuver. So now we've still got this angled resistance over our head. We still have this very large candle, this very large day back here as our containment. And it is very likely that we are not going to leave that containment without some very extreme, very drastic price action. We're going to need a lot of flow. So it's either going to be a news-based explosion or just a steady grind. Uh, the idea that we could make that move today, the ADR says we can make that move, especially when we pair it with the market maker move. But it would be very extreme. We're talking about everything lighting up. Tick, trend, AD, U-vol, market breadth, everything we got would be lit up if we're going to make a move like that. We're talking about making a move like that, and it would look like a day like this. And that's kind of the day that we all want to catch, right? We do have the potential for it to be one of those days. And the reason we make a statement like that is because if you're going to have a trend day like that big blue bar that I pointed out there, one of the key criteria is that we are outside of yesterday's price action. And this is yesterday's price action. We're holding right near the tip of this. When you add to that the same kind of pattern back here, right? And all of this buying pressure, buying pressure. So if you look at the red candle that I have marked out with the price level 1 and price level 2 and all of that buying pressure, this has the capacity for a really nice follow through. So it's on the table. For that follow through that we were talking about, there's always going to be some sort of resistance. So 38.35, the RTH high from Wednesday. $38.22, the Globex open from Tuesday to Wednesday. The cash open from Tuesday, 38.50. Call it 38.51. And you start to notice how we get all of our pivot points lined up. 38.62 and 38.63, we'll call it that. So very nice uniform targets all the way up. And none of those are out of reach. They're all well within the ADR. We haven't even priced in the market maker move to this ADR yet. So 3,900 and 3,911 are well within our reach. So now let's talk about the other side of this. If we don't turn bullish and we actually do leave the range, what do we have left? We've got a price zone 37.42, 43-ish right in there. This is just perhaps drawn better with a small rectangle than with a single line. Then we've got 37.24. $37.08. Now, these are institutional pivot points. And if you get too far away from those pivot points, they become less effective. And we're talking about price action from 617, 620. It's been a long while since we've been there. And these open, high, low, close institutional pivots, you know, they have validity when they continue to line up with each other. Multiple days in a row, for an example, where the close of one was the open of another, was the low of another, and they start piling on top of each other. Perhaps they get a little more merit. But at the end of the day, none of those are going to be a support level. They're not going to hold this market up if we hit them. But they're very likely going to be a place where price will respond. Maybe pause temporarily or give us a bit of a soft bounce before breaking through that and continuing on. They're also benchmarks and milestones, right? So they do provide context, they do provide value, but just keep in mind they're not support and resistance, right? They're just institutional pivot points: open, high, low, close. And while you're out there keeping that kind of logic in mind, you can go to a weekly chart just as well and mark out something like your weekly high, low, close, monthly high, low, close. Then you can use things like a floor pivot. I know we don't talk about that very often, but floor pivots, say the weekly floor pivot, whether we're above it or below it, and the daily floor pivot. There's a strategy called missed daily pivot, MDP. And picking up the MDP strategy is insightful, to say the least. All right, so we're on a year-to-date chart. We're still below the anchored VWAP. We are still below the linear regression line. We are not very far away from the 10-day moving average, but we are underneath it. One thing that I look for out here is to grasp the logic of where we are along the mean. If we expand, say, 3% in one direction, we very often expand 3% in the other direction, and we haven't. Off of this swing low, we got tangled across the midpoint, the mean, and provided a higher low. We basically got tangled again, getting a lower high, and now we've got equal lows. Technically speaking, it's a lower low, but if we're just talking wicks, then yeah. If we're talking candles themselves, we got a higher low. This is still just indicating a whole lot of compression. And the curiosity at the moment is, are we going to continue to make this swing back up and perhaps present with yet again a lower high? Or is this still part of the move down? Because when we get our swing highs and swing lows, they're not always so simple and clean as that. So this swing low, or excuse me, this swing high rolling over and going in this direction, it's not yet confirmed that this is our low yet. We won't really have that answer until today. If it rallies to the upside, then this was our low. But if this current candle, which is today's price, if it actually turns red at some point through the day and continues to move the downside, then this was not our swing. And we won't know yet. Okay, we're going to have to see it through the day. Just want to keep that in mind, right? $10-day, 30-minute chart. So we're inside the box, not quite in the middle. Got a lot of resistance right in the middle around that 38.20 zone. And we got the point of control at 38.60. So we're going to need to get up there. If we did get up there, we'd be very close to the value area high. when we're at the low of the box, we expect to go to the top of the box. And when we're at the top, we expect to go to the bottom. That is what we have on our agenda on a day-to-day basis, but we're not at the top, we're not at the bottom. And we've got volume on each side of us, right? The amount of overhead volume looks very similar to the amount of underside volume. So again, kind of pushing on that compression theory that we've had this morning. We have every expectation this market could just stay sideways for the rest of the day. It doesn't owe us anything. I will point out, however, while we're sitting here on the 10-day, 30-minute, that sure looks like a head and shoulders. Granted, it's an ugly inverse head and shoulders, but it's still an inverse head and shoulders. And the more ugly the pattern, very often the less amazing the follow through. But if that's the left and that's the head and that's the right, then we'd be looking for a trend line breakover. And the idea would be that we measure this distance and then we plot that distance for our target, cutting perhaps 50% and then 100% of the move. 100% of the move gets us up to that 39.20 zone. And 50% of the move seems to get us right through around the point of control at 38.60. All right, we got a 5-day, 5-minute chart here, and we have no untouched point of control from yesterday. We already took it out. We have no untouched point of control from the day before because it looks like we already hit it at around 8 o'clock last night. The argument could be made that the point of control here from Wednesday was tagged in the overnight hours briefly by one single wick, and that it perhaps is not yet not to be considered an untouched point of control. I don't really like that argument, but a lot of people won't use Globex data. They will only use RTH data. And if we did that, then this would still be an untouched point of control. I'm not going to say right or good or bad. It's not my place. Just pick something. If you don't use RTH, then never, or if you don't use Globex, never use Globex. And if you are like me and you do use Globex data, always use Globex data. Don't pick and choose and cherry pick when you want to turn it on and turn it off. So for me, it's been hit. If you do it the other way, carry it forward. It hasn't been hit yet. That means that the cog line at 38.11, basically that's where it is, has some weight or merit to it. And should we get back up there today, we're likely to see some impact out of the market. All right, oil, not yet back above $100, but nice recovery off of those lows from yesterday. Pretty impressive, honestly. Just an absolutely significant ripping move. But now it's back to that spot, and we need to see what oil's going to do. They've been using oil a lot for demand destruction and to help them with their agenda. So we want to continue to keep our eyes on that. Don't forget the president is actually going around the world to bend the knee and kiss the ring to try to lower prices. So yeah, keep your eye on energy. Bitcoin back below its VWAP. Bonds back below the VWAP, but both of those are hovering and holding very close to that. Now with bonds, that blue cyan looking line there, 139 and a half of a point, that is the 4-period daily moving average. We are above it. We bounced off of it yesterday. It held as a support level. We are above it now. And if you're bullish bonds, then you definitely want to see it maintain above that 4. The dollar, on the other hand, tagged that thing this morning and is threatening to break to the downside, break below the 4. If we get below the 4-period moving average on the dollar, we're going to be looking for that 105 again at least, right? That dollar is smoking hot. That thing is like on fire. It needs to calm down. The S&P and the NASDAQ are both range bound. The market itself is range bound. The indexes are waiting for some guidance. And I don't know, I'm torn between I kind of want just a nice boring day with nothing exploding. And a big, massive expansion candle. So I'm good either way, right? I'm kind of leaning more towards how about we just have a sleepy, boring day where nothing happens. We put on a couple of 0-day trades, right? And we cash it out for the weekend. That sounds great, but I don't think we're going to get it. All right. It really looked like those China names were going to get above their VWAP and stick it, but Alibaba broke that anchored VWAP yesterday, and it kind of calls into question the whole JD, Alibaba, Baidu. So much for the China recovery, China tech for the moment. For the legacy sectors, the sectors that we would consider the 11 main names or industry groups within the S&P, and we've kind of expanded on them a little bit, right? Precious metals, we could consider between silver, gold. Well, both of those are down, although gold not down a 0.5%, so not quite far enough to be considered down in my books. Same thing with emerging markets. It's kind of squishy this morning, but not down enough to be considered down. Natural gas, home construction. We get past the things that are flat and start looking at what's positive this morning. We've got semiconductors, we got the 20-year Treasury, USO, Bitcoin, energy, more energy, and the marijuana sector. So I've already got the marijuana sector popped up. We may as well look at it. Some of our smaller names, more commonly known names perhaps, are down, but that real estate pot company XXII, they are up again this morning. Not by much. You can see there's not really much of a print there. No real volume to it. Cron, well, it was right before that bounce off the 50. Chip names. Since Bitcoin is up, we want to look at the chip names that are out there. Um, Basically, all of them, except for perhaps one. When we're looking at all of these green names, again, they need to be up at least 50%. So Intel this morning at 37.9. I'm still building a position in this thing. I finally got to 100 shares yesterday, and my averaged in price was around. I think my total averaged in is 38.7 or 39. So, we're kind of under where my average is, but I sold a 40 or maybe a 41 call. And so this thing can do whatever it wants at this point on an upside move. I'm good to go. We do got a little bit of a ugly disjointed inverse head and shoulders here too. Maybe if you know, close one eye and tilt your head sideways and squint really hard, you can kind of see it. A bit of a technical analysis joke. If you were to measure that out, it gets us around $40. That's also where a significant level of resistance. So someone in the YouTube chat says that Intel had bad news with underwhelming graphic cards, and that is definitely something you guys are going to want to check out if you're considering anything in this. It's got a PE of like 6, and I'm in it for the long haul. And right now they've got really juicy options. I'll continue to sell options on this until my averaged in price is 0, at which point it won't matter to me if Intel is worth $20 a share or $200 a share. As long as I can remove my risk out of that trade, I'm willing to pass it down to the grandkids at 0 risk, right? Averaged in cost price 0. Of course, it's got to survive long enough for the grandkids to be able to actually use it. This could turn into another Yahoo stock, right? And if you're new to trading and you're trying to go look at Yahoo stock now, you won't find it because there is no Yahoo stock. It's gone. It didn't make it. So let's just hope it doesn't turn into another Yahoo. The EV market got a little bit of red, a little bit of green. It's almost a mixed bag, right? When I bring up the EV names, one of the first things that I do is I look at the old school stuff. Ford, GM, it's just in my nature. I'm old. I know Ford and GM. We start getting into things like Ride, Li Auto, Rivian, Neo, XPEV. With a lot of those names, the China lockdowns and the China crackdowns are both two things that have to come front and center, right? Not just what you see on the charts, but what's China been implying with these lockdowns, and is that going to expand from that single district back out into an entire nation again? When it comes to these electric vehicle names, some of these charts, we've got improving markets when we see these things getting above their year to date anchor for the first time. That shows a lot of strength, getting back above the 50, holding and maintaining above the 50 and above that anchored VWAP. It's just a return of health, right? And we got a long ways to go before this is a good solid market again. But it's just these small signs, right? These small signals that imply things are stabilizing. Just remember, we're just kicking off this new earnings season. And what did we talk about earlier? It's only going to take one bank to drastically lower their end of year forecast, not for their company, but for the market overall. We get an announcement like that today, and things could just get really nasty. We talked about the recovery in CL. That's the crude futures. And the rig count today, energy's up this morning. Most of the names are looking pretty good. Remember, when it comes to energy or finance or any of those, it really does help to break things down into a more nuanced component, right? I worked in the oil field for 20 years, and energy is not energy. You've got exploration, transportation, refinery. There's so many different components and aspects, green energy. And so just looking at something like XLE, the energy ETF, it leaves you really blind to where the nuanced part of all of this is. Valero broke below that anchored VWAP earlier this week. And while it's trying to come back up off of that low, we may end up getting, a nice island reversal down there. Just keep in mind now that we are below that anchored VWAP. And if that's the benchmark for the year, being underneath the year to date anchor, this thing could just be beat down, right? Selling to selling. Not that we would do it. That's what the algo would do. All right, everybody. It is my day to stream. I will be in the stock options channel in the Discord around 9:15, as I usually am on Fridays, and we'll get our morning done so we can get a little bit closer to the weekend. Everybody, be safe, be careful. I'll see you all in the chat. And by the way, the interview with Al Brooks was recorded. You can find it on YouTube. It's about 2 hours and 20 minutes long, but I went in, downloaded it, chopped it all up with my video editing software, and I got that interview down to about 60 minutes, maybe 58 minutes. So a nice 1 hour interview, chock full of just insight and wisdom from a man who's been trading probably longer than a lot of you have been alive. He's old. But as I learned long ago, people that have done something year over year, over year, over year, over year, over year, they have a lot of knowledge to drop. And man, he did not disappoint. So check out that interview with Al Brooks. All you got to do on YouTube is just type in Bullish Bears Al Brooks. The video should pop right up for you. It's in our public library. And other than that, I'll see you guys at 9:15.